झूठ देगा ना। नेट बंद हो गया। हाँ वही मेल ना, ठीक है, I'll see.
The broadcast is now starting. All attendees are in listen-only mode.
हाँ हाँ ठीक है, मेरा ऑफिस का चाबी नहीं मेरे पास। उधर है क्या देख। Good evening everyone and welcome to the first support webinar of applying Fibonacci techniques. Can everyone confirm to me if the audio and the video feed is in order so that we could proceed with the webinar? Great. So today is day 1 and what we'll be covering today is Fibonacci retracements, Fibonacci extension and Fibonacci projection. So Sir had covered 3 aspects of Fibonacci and he had shown us through various examples as to how you could apply it on the charts and use the mathematical relationship of the Fibonacci summation series and find out ideal entry points and exit points. So what we'll be doing today different is we would be actually showcasing you some examples which you would have to tell us which is the correct one. So which is the right example of a retracement? I have labeled it as picture 1 and picture 2. You could type in with your answer. It's going to be an interactive session, guys. I do not want this session to be just another interaction. Okay. 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 Answers are coming up. People are bending towards picture 2. Well, the correct answer is you can use both, and that has been well answered by Rahul and Praveen. Great going. So what we would do is we would now go and see it on the chart. Alright, this is the chart of Adani Port. Can everyone see Adani Port out here? This is the leg which I have considered from this low to this high. On a daily chart, it's taking support at 50% retracement of this whole leg. What about the other one? We saw 2 examples, right? You use the extreme swing low, which is seen over the last 1 year, and then we use the intervening low. Out here, ideally consider lows from where the swing has begun. If you draw from here, I'll just have it differently colored. Give me a moment. The perforated lines, you can see it has hit exactly at 78.6, which is a non-standard. From the non-standard Fibonacci at 326, it's given us a fantastic rebound. So the answer, both can be used, is correct. Did others get it? Great. Now we again go back to the PPT. This is example 2. How do we read this one? There's no point C, but which is right? It's not an extension, it's only point A and B. It's a retracement. It's not an extension. This is a chart of Lupin. Picture 2 is correct. This is a chart of Lupin. What we'll have to first see is how is the stock performing. If you see the daily chart, you're seeing that the stock is making lower highs and the stock is in a downtrend. It's only rebounding. So in such scenario, it's always advisable to draw a downward retracement. In this scenario, for example, Lupin has broken out of a consolidation. You see here, and at this juncture, there's a big consolidation, and Lupin broke out. So here you will be drawing an upward retracement. But here, it's come down sharply, and then subsequently there is a rally. So in this regard, yeah, there is only point A and B. That's why I said please ignore point C. This cannot be A and B because it has no relevance. Instead, if a sharp downtrend is reacting, ultimately stocks react to the overall market sentiment. So if the overall market sentiment is negative, you should be looking at resistances. We are dictated by the trend of the market. So we should not be saying that the stock will be playing its part, will be playing against the trend. Stock can never play against the Nifty or the Bank Nifty or the broader indices. So the main crux here is first determine the trend of the market, then trying to find resistances or supports. There's a query asking whether the webinar has started. Yes sir, the webinar has just begun. The webinar will be held at 6:30 even on September 1st. So what we do here is we draw a downward retracement in Lupin. And you can see here that it is again getting stuck at the non-standard Fibonacci ratio 78.6. Not once, but 3 times. Even today it attempted to overpower 1905. But yet again, the prices succumb to this magic of Fibonacci. You can see here how powerful Fibonacci is. The only thing is you will have to select the right swings, and that's why I have chosen these kind of examples and these kind of illustrations to help you understand how you are supposed to frame the charts. Is the retracement concept clear? Any questions on retracement? Okay, great. We cover we use Fibonacci and we use many other tools in our advisory service. Some of you have already heard of our advisory service stock gains. Some of you are not aware of what exactly stock gains is. So let me take a few minutes to introduce to you what is stock gains advisory service all about. Stock gains advisory service is focusing only on stock futures, long, short, swing trades, a 2-day, 3-day trade. What we do is we come out with recommendations throughout the day, and then there is a request for combining it with time extension. So we'll be combining it on September 1st. We have divided the portion of this support webinar, and today we'll be focusing only on Fibonacci extension, projection and retracement. We are done with retracement. Now we are left with extension and projection. Thank you. So stock gains advisory service is focusing on giving you precise recommendations and helping you garner profit from the intraday volatility as well as overnight volatility. So what we do is we continuously ensure that we are staying right on top of the trade. We give you SMSs enough to give you evidence that the market is reversing from here, exit from your trade. We don't wait for the stop loss to be hit, or if we feel that you have got decent profits, then we ensure that we send a message and get you out of the trade. That's why we continuously monitor and enable that you are ending with a profit month after month. So this is what our performance till July has looked like, where we have recommended close to 4 to 5 trades a day, and we continuously churn them by providing SMS. So you may be having 4 to 5 SMSs which initiates you into the trade, and then we follow it up with an exit message or a profit booking message. We expect that the stop losses given in the system in the message is inputted by you in the system. You can see here that we have enjoyed a very healthy equity curve despite the market being quite volatile and hesitant to go on either side of the market side. So you can see that our recommendations are using methods taught by Dr. Narayan, and using the trades which we have, we give out a call based on whatever methods which he has taught us. Just wait a moment, there is a query. There is an inquiry asking whether we give out the technical basis before giving out the call. Yes, sir. Modit, we have the query is from Modit Masi, and I would like to highlight to you that Trader Central is one such revolution which has come up from Growth Avenues. Growth Avenues always enjoys the prime position of being an innovator in the field of capital market. Just for your knowledge, Dr. Narayan came out with newsletters way back when people were not even aware of the concept, and today we have come out with Trader Central, and I'm very sure that both many corporates and many advisory services will surely copy this feature. This unique feature from Growth Avenues called Trader Central will give you the basis on which any trade is given. It will give you the basis on which you could take a call, you could exit a call, and enhance your understanding of technical analysis concepts. Some of the people out here who have been part of our webinars, they know that how much value addition the Trader Central provide. It gives you news, it gives you views, it gives you trades, then it tells you how to see the market. It's like you're wearing a special glass through which you're seeing the market and are not getting stuck like other people. So in layman terms, you will be like Mr. India. You can see through the entire volatility, entire circus which is happening, and that's what we aim to do. We aim to give you the transparency and the flexibility to trade the market as it happens. So this is what stock gauge is all about. And for those who are interested to know more about the market, read more in depth, we have the newsletter called Nifty Edge. You can call into our office, check out how the trades work, what is the vision of the market. We all read Economic Times, but how much do you profit from it? Can you all tell me? How much do you profit by reading Economic Times? There is no responsibility, there is no accountability, and well, they don't care. They are just passing on the information. And mind you, some of the information may already be uh, discounted for. So, how are you going to benefit by reading Economic Times? I'm sure you won't. But by reading Nifty Edge, we are 100% certain that you will benefit because it's way ahead of the street. It tells you what the market is going to do. And why will it tell you what the market is going to do? Because the letter is written by Dr. Narayan using his 37 years of wisdom and his knowledge about the capital market. He brings to you a unique and very interesting newsletter called Nifty Edge, where we discuss not only about the Nifty or the Bank Nifty, we discuss the commodity space, we discuss the currency space, then we also come out with stocks. So that's how the Nifty Edge letter has been positioned, and I'm very certain that you will never get a newsletter like this in anywhere in India. This newsletter is the longest running newsletter in India, where we started way back in 1990. Okay, let's move on now. What is an extension? Extension again belongs to the golden ratio of contraction, and here we use 2 points. So can you all tell me which is the right picture? Picture 1 or picture 2? The vote is mixed. The answer is definitely not both. Yeah, we can use several of these, but right now I'm discussing the probability of an extension. We have to use Fibonacci extension, retracement, or projection to find out ideal supports. So when you see in the ideal candlestick language lower shadows appearing, then we should get our antenna up to find out, hey, is there some supports bunching out there? Well, let's go on to the charts. Neither is definitely not on. Let me just show you. This is the chart of UBL. Extension is when a price moves above 100%, right? So here you are actually seeing a red candle, and an extension is drawn when it is against the trend. So you can see here the prices have risen, and again it's exceeded 100%. There should be a contra swing. Can everyone get that? Here the prices are going high, but immediately the prices are reacting. So you can see here there is a contra swing, and if you use these 2 points, you get a 2.618, where the prices have halted. Is this point clear? You can see here that's it's in a downtrend, and then the reaction, you're taking a 2.618 of the reaction, and you see here it has reacted and it is now going down. So when it breaks this 100%, then you take this point and this high. So you make a downward projection, and that's why picture 2 is correct. Is everyone clear with this picture? Okay, let's go to the next one. What about this? Well, that's interesting. Two people are not interested at all in this chart, and there is there are few responses which are saying both again, probably. If you all have the intraday charts, you could try it right now. See, the aim of any Fibonacci tool is to get the aim of any Fibonacci tool is to find the support, right? Why don't we do one thing? Let's plot it. The answer is picture 2. Picture 1, sorry. The answer is picture 1, but I'll show you on the chart. This is a chart of Nifty. What are we doing here? Here the Nifty is heading lower, right? It's forming lower lows. So in that case, take the contrast swing. We'll first do of this swing. Then we find it is not holding on to this swing. Now, if you do of this swing, you would see it's holding on to 423.6, which is again a non-standard one. So the trick is that you will have to go the trick is you'll have to go to the nearest contra swing. See here, the marking is wrong in both the pictures. So people who said both the pictures are correct, I was referring to this swing and this swing. So both the pictures are wrong. what we'll have to do is we'll have to go as of this day. You have this as the contra swing. So you will be first putting your Fibonacci extension this way. Then as the move transpires, you will see that this doesn't seem to have much significance as of now. So then you would delete it, because again you have a contra swing, in the sense a rally from 8357 to 8561, so which is around 200 points. So we have taken this swing because this is the most recent contra swing. If you take the most recent contra swing, then only you get the ideal support. So here, as prices broke down, you can see here that around 8330, 8350 was a value area which was held for more than 2 months, and now it eventually broke down. So when this happens, you will have to take the reaction swing of the most recent one. You can see here the most recent one from 8357 to 8558. It actually gives you a good perspective of where the Nifty has headed. It's come to 423.6 and it's formed a shadow out there, and you can see here that the supports are holding on. So the test of time will say whether 7700 will be held. But yes, for now we are finding that 7700 is a good downward projection and it's holding. It's an extension. So trades like these come often during the market, and for those who do not want to do the drudgery or the hard work of Fibonacci, they can always resort to methods. Growth Avenues uses many types of methods which help you to be like the picture you see here, celebrating on either side of the trend. And the main aim of any trade, what could be the main aim of any trader? Can you guys tell me? What could be the main aim? To be profitable, right? Make money day after day, month after month. But how about being profitable year after year? What are the things required to be profitable year after year? Because if you want to make day trading a serious business where you would be actually leaving your job and trading all day, or putting your hard earned money, what we'll have to do is you'll have to first reorient your thinking, reorient your methods, and all this is covered in our webinar, Winning the Day Trading Game. We all want to win, right? We all want to win all the time, but well, that's not possible. So what should we do then? The best way to attack this market, I would say, is improve your stock selection. How would you do that? Select some method or search the net. Well, we are solving that problem for you. We are sharing with you the very own methods which are developed and tested at Growth Avenues through Dr. Narayan in this webinar. We tell you what kind of mindset is required to perform day trading. Then we showcase what are the various ways to find out your targets, what are the various ways to track your trades and ensure that you are staying on the right side of the trade. Then we show you how to set up your charts so that you are able to understand what are the trading probabilities that are emerging from either a dull market or a volatile one. And at the end of the day, we need discipline. I have written it in small case, but actually it should be in caps, because that is the worst thing. That the worst thing which can happen to you is absence of discipline. And unfortunately, when you go out in the market or meet your friends or talk to your broker, you would find out that discipline is something which is totally absent from this market. That's why you have such free falls. But well, some of them are saved because they have instituted discipline in their approach. So we'll be talking about all these aspects and more in this webinar. This webinar is conveniently positioned on September 12th and 13th of the next month, which is a Saturday and Sunday, so that you can enjoy and learn from the comforts of your home from 11 a.m. onwards. So I would be looking forward to meet you all again for this program titled Winning the Day Trading Game. Well, we saw a Nifty extension. So this is focusing on the projection aspect of Nifty. Which picture is correct? Projection focuses on 3 points. Retracement and extension, they focus on 2 points. We need to see which of the projection finds out the best support. So well, we'll first draw the projection and then we'll come to this example. We need 3 points for a projection. Take this as point A, this decline to be point B, and take this to be point C. So we see here that at this level it's holding on. The reason why this is correct, this is the right one. Picture 2. Picture 2 is correct because here the point C is too much of a sideways action. Can everyone see this part? It's too much of a sideways action, hence this cannot be considered. Picture 2 is more appropriate, and that's what we have drawn in this chart. You can see here. Is everyone clear with this? Any questions on retracement, projection or extension? Great. What about this one? By now I'm sure you all have become an expert. The answer is picture 2. This is a chart of UPL. UPL weekly chart. See, I've taken this low of December and the immediate low which happened in Jan, and you can see here how it has managed to arrest the prices since May. Mind you, this is a weekly chart, and you have seen two examples of 423.6. This again a non-standard. Somebody asked me what is a standard and what is a non-standard. Sir, standard ratios in contraction are 38.2, 61.8 and 23.6, and the standard ratios and the non-standard ratios in contraction are 78.6 and 50. Is it clear, sir? And if you go on the other side to the above 100%, where we talk about which we cover in the extension also and the projection also, the standard ratios are 1.618, 2.618 and 100%, while the non-standard are 127.2. Then you have 423.6, then you have 200%, which we covered during our example, which sir explained to us in detail about Yes Bank. I hope you all remember we discussed Yes Bank in detail, and we have sent a mail to you showcasing the power of Fibonacci and how Yes Bank worked beautifully as per our discussion. And post our discussion, Yes Bank dropped by more than 100 points, and it would have given you great winning potential if you had participated in the trade post the webinar, because it gave us enough opportunity. You can see here at 423.6, it's playing a very stellar role in containing the prices. There is no weekly close above 556 since May 2015. So you can see how powerful Fibonacci is. You'll have to learn to spot the swings. You'll have to learn when to use it. Look for resistances when you see shadows appearing at the top. Look for supports when you see shadows appearing at the bottom. Basic technical analysis concepts have to be addressed first before you move on to Fibonacci. Once you do that, then you try to look for resistances or supports. Is it clear, everyone? Okay, with that we come to an end of this support webinar. I would like to open the chat. I'll be available for the chat for discussing any of the aspects regarding this retracement projection extension. Hold a moment, I'm having a question out here. There's a question asking which is a valid Fibonacci point, 78.6 or 76.4. We would suggest 78.6, as you would find that in many retracement examples you will find 78.6 to be a good spot of good Fibonacci series where the prices react quite aggressively. So any reaction into 78.6 should be considered for taking suitable action. Is it clear, sir? In next webinar, we'll be discussing on Fibonacci fan, Fibonacci clusters, and how to set the time on one example. I'll show it to you so that I'll show it to you live so that you can understand how to work on it. There's a question asking whether RSI follows Fibonacci. The answer is both are independent tools. RSI is an oscillator and Fibonacci is a tool which is applied on the price. RSI mimics the price movement, so it follows the price. Is it clear now? Any more questions, or we are ending the webinar for now? Thank you all. Thank you all for participating. See you on September 1st. Bye and good day.